As a subscriber to this channel, I'm going to make a promise to you to share the best strategies that I've ever used to any success with you guys so that you can have the same success. Any tools that I come across that I use and I implement in my own trading or investing or wealth building journey, I'm going to share with you straight up so that you can immediately have the same results or work towards having your best life using these tools. From today onwards, my mission is to share everything I've learned that's got me to where I am on this channel so that you guys can watch it, learn it, and go and have the same results. In this video, I'm going to be sharing with you a tool that I've been using over the last 8 months that has had phenomenal results using it with my trading and my investing. Whether you're a day trader, swing trader, value investor, crisis investor, stock investor, what I'm about to share with you can dramatically accelerate your wealth creation journey. It's added an additional 20% return to my stock portfolio in the last 8 months and an additional 15% to my swing trading strategies over the last 8 months. In this video, I'm going to share with you what the tool is, what everything on the tool means. I'm going to be talking about where this is going to be extremely powerful for you. It's going to give you an insane edge. And at the end, I'm going to show you how you can use it right now in ways that can immediately help you start growing your wealth. So be sure to stick till the end. As with all my videos, this is going to be a very practical lesson. There's going to be lots of nuggets shared. You're going to want to take a lot of notes. So cancel all the distractions. Do yourself a favor. Grab a drink, grab a coffee, grab a tea, a pen and paper, go and find a quiet spot, sit back and take lots of notes. Let's get stuck in. I'm going to share with you the link, right, in a bit. I don't want you going off and searching it because at the end, I'm actually going to give you a way that you can get this for cheap as well. There is a subscription to this tool, very, very low cost, but I'm going to get you even more money off of that because I'll show you how to do that as well. So I don't want you clicking around. I don't want you signing up to anything yet. I just want you to listen and I want you to watch what I'm doing because I'm going to explain some very important things about the tool as well. So the reason I pulled up Google is because this is the tool, right? Now, it's called Forecaster. And the reason I pulled up Google is because you can see it looks very, very familiar to Google. Very, very clean, very, it's just got a search bar. And we're all familiar with that type of workflow, right? Who has seen this? You probably haven't because it is literally, as you can see here, just to prove I'm not like bullshitting you, I am a pioneer. I've been involved with the first part of this project. I've been testing it. I've been like using it in anger. See, I'm not part of the business. It says there, if I cancel my subscription, I lose the privilege and all the rest of it. I'm a paying member of this and I'm a pioneer because I was one of the first people to pick this up. So I just want to share that with you guys. Full disclosure. One of the benefits of being a pioneer of this is I was able to offer it out to my close community like you guys and give you, and you'll get a discount on it, right? But I'm a paying member of this. So looks very simple to Google, search bar, and I'm going to take you through a bit of a journey here, right? Let's just type in any instrument, right? So we're just going to go for Nasdaq, right? Nasdaq 100. Everyone know what Nasdaq is? So here's how it works. The first thing to do is look at this tab called Seasonality, right? Write these notes down. Don't go on the site and follow along. Type away so that you take it in. Seasonality. Now, seasonality is something that's always been a thing. If you think about investing and you think about trading, seasonality is all the different seasons. You've heard me speak about the seasons of recession, right? And all of the trends of a recession and what patterns we see. And I've studied 100 years of data to show you the seasonality of recessions. Well, there's seasonality in everything. There's seasonality between the DAXI and the hottest time of year in America. And there is a seasonal trend and correlation between that, believe it or not. Now, why is that important? How can we use this? Let's just say that we're going to pick. So let's just have a look here, right? I'm going to just go into this area here, right? Here's how it works. Let's just go from here, right? So we can go from this low all the way up to probably the end of this trend. So everyone knows what a bullish trend is, right? Let's just go to the end of August. So end of August is here, looks about where it ends. And you can see that we've picked this bullish run, okay? Now what we want to do is we're checking to see seasonal trends that have taken place over time, like through multiple year averages. So the 5-year average, the 10-year average, the 7-year average. And the way we do that is we can click on this little button here and we can pull up the 7 and we can pull up, wait for that to click on, and we can pull up the 10-year, right? And we can also pull up the 15-year, right? And you can go on and on and on, but what I've been using is the 5-year, 7-year, 10-year and 15-year. Okay, so take a note of that. And what we're looking for is we want to see confluence between them all. All right, this is going to be so powerful when this all clicks in place and you get it, right? So you can see, we can check each of these. We can say, right, okay, if we can take off these ones, we've got the 5-year, right? We know there's a trend here. Let's go to end of August, right? And we know on the 7-year, there's a trend. And we know on the 10-year, there's a trend, right? And we know on the 15-year, there's a trend. What this means is over the 15-year period, this section, this from mid-June to the end of August, it's bullish. Not only on a 5-year average, but on a 7-year average and a 10-year average and a 15-year average. Who's already getting a little bit excited to where this is going to go? We're not even scratching the surface yet. You could probably just see alone in this that's pretty decent to know, right? That's quite handy to know. Now, what we can do next, so I'm going to show you what all this is and what it means, and then I'm going to show you exactly how you can use it. If we scroll down here, you can see we've gone from the 11th of June to the end of August pretty much, right? Now, the weekly average I'm going to talk about in a minute, but in the monthly average, you can see that in that month there, on the 5 years, is 100% is long opportunity, right? So 100% of the time in a 5-year period, it's long. 100% of the time over 7 years, the market's gone long. 90% of the time over 10 years, the market's gone long. This means that you can actually, over 10 years, you can pretty much stack the odds in your favor of being long in this period of time and you're okay. But the beauty is 87% on 15 years. That covers recessions. Pretty good. Now, if we scroll down as well, I'm just going to show you what each of these things mean, how to navigate all of this stuff, and then I'll show you how to use it. You can also see that data is also correlated here. So you've got 100%, 100%, 90%, 80%, but you've also got the return. 9.1%, 7.5%, 7.5%, 7.5%. All I've done, guys, by the way, is type into a Google type search engine, a market, and that's taken me all of 5 seconds. And now I've just picked one of these periods. Now, bearing in mind, I've taken quite a broad period. I'm going to show you a smaller period in a minute, and I'm going to show you some opportunities on the radar next week. And I'm going to show you some of these things. But this is quite useful, right? And now we've gone down and we've seen all of these long opportunities. 100% of the time between that period and that period, you're likely to, it's a long market over the last 5 years, 7 years, 10 years, 15 years. Not only that, we can see our return, the return. Okay. Now, if you go short, obviously click this button here and you can see there's not, 3.6% return over 10 years. So that's not what we want. Can you imagine what difference this will make to your overall wealth building strategy, your investing strategy? I'm sure you guys are already thinking about how you can use it in your passive investing, your value investing, your stock investing. So we've looked at some statistics. Okay, we've looked at all the stats. You can see some of this information here. You got the max rise, the max drop, the revenue, right? And you got all the close price and everything in the data table, right? That's pretty good. That's pretty good. Now, let's just say we move the trend from, let's just go from beginning of September to the end of October. You can see this is a downward move. And now it's adjusted all of our figures. And now look, terrible, right? Because, why is it terrible? Because we're looking at longs. Look at this, right? We're now making another 5% on the way down. And we can see that there is a month here where we've got 80% over a 5-year is short. 86% over 7 years is short. 70% short over 10 years. 53% short over 15 years. Now, I don't know about you guys, but those odds are stacked in my favour. And I like to be right more than I'm wrong. And now you can start to see how I've managed to really accelerate returns by not changing my trade plan or changing my strategy, but being more selective over when I deploy that strategy. Make sense? Think about cash for the crash. Think about being greedy when others are fearful, fearful when others are greedy. Think about your swing trading. Think about your position sizing. Think about adding to your position. Think about how you manage your trades, right? I'm going to go through a ton of things on exactly how you can use this in a little while, but crazy, right? Really, really great. Great stuff. So it gets exciting because now we're starting to look at, well, we can pretty much see great opportunities on the way up. We know how long to hold for, roughly. We can be conservative on that if we want to. Then we know how we can catch the move down as well. And by the way, I'm just going over broad periods. This isn't day to day. This is monthly averages I'm talking about here. This isn't even daily average. This isn't even weekly average. I'm going to go to that in just a moment. Let's take a look at next week. So what's the date? In fact, let's go literally next week, yeah? So January the 28th to the 3rd on the Nasdaq, okay? Now, let me, but I just want to bring these on. I want to show you literally next week's opportunity here. And then how we go into the chart, how we identify this, and then how we can actually use this. Where's the weekly average? Look at this. Next week, we've got the Nasdaq 28th, which is Monday, I think, right? 1 week. Now, that weekly average, look at this. Friday, big short day. Big short day, right? So we've got a little bit of time until we get there. So let's bring on the chart of the Nasdaq, right? Now, you can see that this is moving quite nicely, right? And, you know, we're looking for a potential short. Or we could look for the long, because all week you've got high probability longs, right? You could even be looking at that monthly average and looking at this as a good long month, but it really isn't on this particular market. So the way that you would do this is you would look for the longs or the shorts, and you'd be making trade decisions based around that thesis, okay? And you can also use it for your target taking. So let me give you an example. Let's go over to the Nasdaq and let's just drop down. I mean, you can see we're booming at the moment, so it's due a short. Can you already see that we're setting up for a short? Those of you in my Elite Trader program or tier 1, you guys know that this can't go on forever. We're putting in a rejection candle at the moment. We've got about we've got the close of this candle. Tomorrow we might see even a 3-bar reversal if you're familiar with that. If we drop down to the 60-minute time frame, we're already pushing down. See that? So if you're looking to catch that long at the first half of that week, what would you be looking to do? Well, let me just go back to this and show you guys some data here. If you're looking for a long, 3%, right? Now, what you can do is you can come over here, and where you're looking to get long, you build a long strategy. So whatever your trading strategy is, you can see we've got a previous double top here, should become a bottom.
somewhere in this zone is a nice place for a long entry, well, guess what? You're going to be looking for a 3% return, right? So if you're getting in from here, you can just use this tool to go up 3%, right? Or 2.5% if you're a bit more conservative. And guess what goes here? Your profit target. And you then only look for longs, right? You only look for longs. And if you get to Friday and we're up here, then you start looking for that high probability short on the Friday. Can everyone start to see, like, is everyone seeing this? Everyone's getting this, right? Now, I know, I appreciate some of you might not be, and you're very early on in your journey, but this is mind-blowing. Honestly, of all the things I've seen, of all the tools that I've seen, and I've been in the depths of prop firms. I've been in the depths of trading brokers, and I've never seen a tool. I've seen tools that are very, very powerful, but they're heavily coded and they require a lot of management. And if you don't, know code, you're not going to be able to manage that thing. This is very elegant. This is literally Google. This is literally Google, right? So just to kind of summarize what we've seen so far, before I show you some other opportunities, this is a tool that allows you to identify strong seasonal trends, okay? Where there's a strong and high probability of the market going in a certain direction, historical averages over a number of years. And then we apply this to our trading strategy or our investing philosophy, and we build a long position or a short position. And then you can add to the position size or get in and out multiple times. It's up to you. You could keep adding to your position, or you could get out and then into another position, right? So it's really powerful. There's this button here, which is Detrend, okay? Now, Detrend isn't good for spotting trends, okay? Because all of the trending algorithm is removed from this part. But what this is good at spotting is lows and highs of price, okay? So you can see where the lows and highs of price are in a trend, but not, this isn't the trend of price movement. This is the lows and highs of price. Everyone understand that? There's a difference. It's nothing to do with the movement of price in terms of how it moved. It's more the highs and lows of price. So this is really useful as well, because if you're trying to pinpoint an entry, this can be phenomenal, particularly if you weigh it up again like we did before and we throw on all of the other 7-year, 10-year, 15 years as well. You can really start to see the mean bottom price. So I applied this to my recession investing. It's phenomenal. The recovery periods of recession investing. I did some historical testing on this over Christmas. Absolutely blew my mind. And if you guys want me to share more of this and how I'm using it after this huddle, please let me know. This is something that I can bring into my live room. This is something that I can do a lot more of. I can even do a whole workshop on this and how I use it in every aspect of my investing and trading. I'll be happy to do that if you guys want me to do that, because I've spent 8 months with this and I just want to share as much of it as I can with you guys. Looks like you guys are interested in that. Cool. The Detrend works really good on stocks as well. So if you're trying to pick see those lowest prices, you're going to see some great. You're going to be able to drill down and be really accurate with your Detrend chart there. Get those low prices. Okay, so really, really cool. One of the things that I do want to show you is just on this overview page. Another cool thing is we're talking about all these seasonalities, and you don't want to have to keep remembering all this stuff, right? So what's being developed is this calendar feature. See this calendar, right? So what you can do is you can go down to here. It says 8 days till the next earnings. So we've got the earnings coming up for Apple. You can go to fundamentals, click on the fundamentals, and you got all this information right now. Remember I showed you guys the intelligent investing tool, and I said there's a Benjamin Graham number, and there's also Peter Lynch as well. You've got all of this data comes from a Bloomberg terminal in the background. Okay, so not only is it from a Bloomberg terminal, but it also comes from the CFTC commission. So it's directly loaded from real resources, and it does all the formulas for you in the background. So it tells you the average fair value of the stock, and it tells you the Benjamin Graham price, and it tells you the Peter Lynch price, it tells you the economic value. This is insanely valuable information when you're skimming through stocks. I've shown you guys the magic formula, right? They're also building that into this as per my request. So that's really cool, and that's a future thing. What I was getting at is the calendar. You see these little things here? You can click this, and boom, just like that, that will now be added, the earnings season will be added to my calendar once I've clicked that. And you can see that we've got no events in the calendar here. If I click on my calendar, you can see now I've got some Apple earnings in my calendar, so I can put a note on that, and I can say, right, call George and discuss trades and all this kind of stuff, right? So we've got that in there as well. Pretty cool. Now let's just go back to Apple. Let's do some Forex stuff. Okay, let's do some Forex stuff. So I showed you the short on the euro dollar, I think, didn't I? I showed you a short, 80% short. Let's go dollar yen. Let's look at February on the dollar yen. 1st of Feb, and we'll go right through to the end of Feb, this little trend here. Okay, so you see that I've gone from the low in Feb to the high in Feb. This is the dollar yen, if anyone wants to follow along. Let's go. Now, you can see, if we just bring on our little charts here again, and we go long, obviously, we're looking at longs. So first of all, remember, we look at the confluence. So we just drill down, we say, right, okay, we know we've got our 5 year there, right? We know we've got our 5 year, 7 year, there's the confluence there, 10 year, confluence there, we're still going up, right? 15 year, over a 15-year period, strong correlation, right? So if we then scroll down and we look for long opportunities, 100%, 71.4%, 70%, 70%. Good month, right? Good month for longs. Look at June. In fact, look at the weekly average. So you can see how you can start to, depending on what type of trader you are, you can really use this to your advantage in your analysis. Another long, 31st of Jan, which was here, or around here, right? All the way up to mid-March, actually. Or second week in March, the beginning of the second week of March, or the end of the first week in March. And you could even take this further, you could keep going up to the highest point there in March. Bring on the 7 year. It takes a little while to load these because there's a lot going on in the background, trust me. It's not just pretty, generated graphics. It's actually real Bloomberg data coming in, which is it's really quick. If you knew what it was doing in the background, it's actually really, really quick. So there we go, right? So end of Jan till mid-March, right? Looking for longs. There you go. 100%, 85%, 70%, 66%. Monthly average, February, March. February's a great month for getting long. How can you use your dollar index in your trading? You traders know, right? It's very, very powerful. So the overbought, oversold. There's a couple of formulas here. Speed, okay, and the Wyckoff. Does anyone know what Wyckoff is? Or Wyckoff? It's basically, it uses the RSI and volume, and it combines them to calculate divergences and reversals in trend when the market's running out of steam. And it is pretty bang on. This is the most accurate that I've ever seen it portrayed on a chart. Maybe that's because it's from a very expensive Bloomberg terminal. I don't know, but this is very, very powerful. And I'm not going to go into the intricacies of how to use this part of it. I'll do that in a dedicated lesson. But essentially what this does is when you identify the market pushing down, okay, and you see this pushing up, there's a strong chance that there's going to be a strong buy signal soon. If you see the market pushing down and this pushing down, there's a high probability that we're going to continue down, okay, and it's this, if you can use this and you get familiar with this, it's gonna give you more accurate graphical representation and data than anything else that I've seen. Absolutely phenomenal. And it's also colored, right? So this red zone here, look, it goes red when there's a strong probability of a pullback. Red when there's a strong probability of a pullback. Divergences is always better to use for reversals, as you guys will know. So I don't use RSI or divergences very much for a continuation other than my swing trading, but you can use it phenomenally well if you're using it for reversals. And you can check this if you want to check this out and compare it. Those of you familiar with like the whole moving average, it's similar to that. Now let's take a look at crude. Crude oil is really interesting at the moment. Look at this. February and March going to be a nice time. This, if I go into this in detail, it's going to confuse a lot of people in here because I've never spoken about the COT reports in TOF or anything like that. And it's, to be honest, it's not something that I personally use. I haven't used this in my own trading, but where I will use this is in crisis investing, and I'll do an updated lesson on that. But what I recommend you guys do is go and check out crude oil. I'm not recommending you to buy it or anything like that, but go and check out crude oil and just do some analysis on that. One thing I like about this platform is they've deliberately intended it for not to be a black box, okay? Everything on here, if you click on like the little information tabs, it will explain exactly what's going on behind the scenes. It will teach you and educate you on all of the formulas, how it's presented, where they're getting the information from. And they specifically said to me, it's not designed to be a black box. We want to educate people. It's how, like, it's a tool for convenience, and it's one hell of a convenience tool. So I really love that. I like that. You guys know that I like that kind of thing. But let's take a look at the gold, because I always get asked about gold. Let's go from November, yeah, so this low, until mid-April-ish. This little trend here, seasonality. Let's go over the 7-year, 10-year, 15-year. You guys can see what I'm doing, right? I'm just picking a big move. And something that's in play at the moment, because we're about here at the moment. So what I want to share with you is some of this. Look, weekly averages, monthly averages at the moment, February. So if you was to long 9%, 8%, 8.6%, 8.8%. So when people are telling me that they can't do 10% per year, I'm talking about 10% in a few months. And if you click short, you're going to see that you don't really have a good opportunity to short this. Okay, it's not a good idea to short this, but long over that period of time, that is showing you real data for gold. Because a lot of people ask me about gold, because gold fluctuates over time. People always asking me, well, how do you know when's a good time to buy, a good time to sell, or do you trade gold and all the rest of it? What a perfect tool for that. Because this is giving you some real solid backtesting data. I always bang on about backtesting. But there are periods of decline. So look, you can see if he's long, there's only one year there in 2017 where it was break even. You know, yeah, we had a down year there, but look at that. Great, right? So it shows you all of the data year by year as well, which I think is phenomenal. Because you can actually say, okay, well, there's a pattern there. You know, maybe this isn't the year. Maybe this is the year to get in, or you can expect a bit of a downturn, or you can go and research that year and say, oh, do you know what? That was because of this or that. And you can counter that as well. Really, really powerful. Really, really powerful. So the COT report, I'm not going to go over. We're dragging on a little bit. I want to show you guys. Let's go to Bitcoin. I'll show you guys Bitcoin. And then I'm going to show you how you can use this. You can go away and use this right now. I'm going to give you all the ideas of how I'm using it. Before I go through Bitcoin, I'm going to give you guys a link. There's the link. If you 24 hours, you can use this for free. Okay. And then I think it's about 100 quid or 200 quid for the year. So it's a great tool. I think you can pay monthly for it as well. If you use Graystone as the promo code, they've said that you'll get money off, 5% or 10% off of the thing. Something around that, but it's money off and it's money in your pocket. So I'm all down for that, right? So you can go and use that code and get some money off if you want. So Bitcoin, highly recommend if you're serious about your trading, serious about your investing. If you've got a TradingView account and you pay premium for that, or you pay a monthly fee for that or an annual fee for that, for the stock screeners, or maybe you've got some broker software that you pay for, this is another tool that is, I think you can all see how this is going to pay itself tenfold very, very quickly. So it's well worth it. It's definitely in my toolbox now. And I can't wait to show you some of my actual trades and investments on this thing as well. So Bitcoin, let's have a look, right, shall we? Let's have a little dig in here. So I'm going to go from 23rd of January, which has just gone. Okay, so the 23rd of January to, let's just say February sometime. Let's just go up to this little spike here around the 19th of Feb. All right, let's have a little look, 'cause this is imminent. Now, you notice that you can't go back 15 years here. Why is that? Of course, it's not old enough. It's not old enough, right? We're looking at just gone, so yesterday until mid-Feb or end of Feb. And we're looking at the 5-year, 7-year and 10-year confluence. And we can see all of those. There's confluence between all three, congruence. We can see the monthly averages and all that, but look at this. 5 years, 100%. 7 years, 85.7%. 10 years, 80%. Look at the returns. 21%, 20%, 16%. This is the real deal. In the future, there's going to be all the worldwide indexes across the globe, every index. You'll be able to put the companies into most valued to most undervalued as well. There'll be that kind of feature. There's also magic formula analysis and investing coming into this as well, where it does all of those formulas for you and presents it in a chart like this. I want to show you guys how to use this right now. I'll show you how you can use it right now. I'm going to give you some ideas. And although these won't be actual practical demonstrations, which I'm going to do in a dedicated workshop, this is actually going to be spark some ideas on how you can use it. So firstly, in your swing trading or day trading, entries. You can use it in entries. You can time your entries better. You might only trade on certain dates. You might only go long on certain dates or short on certain dates. Make sense? Position sizing. You can increase or decrease your position size depending on how strong that 5, 7, 10 and 15 year percentage is. Right? So you can increase or decrease your position size. You can add to your position size as well. Don't have to just go full bore. You can add to your position size over a number of days. Stop loss management, right? Or trade management. You can manage your trades or set your risk accordingly depending on this. Target aggression. Target aggression, where you're more aggressive with targets because you know there's more time to move. Make sense? You can add to your position multiple targets. Positive carry. You can exploit positive carry. You can reduce negative carry. You guys have been through the Elite Trader program. I spoke about positive and negative carry. Make sure you go and watch that. I'm not going to explain it here, but there are some very good exploitation strategies that you can use this for with regards to positive and negative carry. Much more on trading. I'm sure that's just a few ideas that spring to mind, but you guys can think of a lot more. Passive investing, increasing deposits, decreasing deposits, advanced dollar cost averaging, depositing lump sums. Get asked about that all the time. If you've got a lump sum, how do you deposit it? Well, now you've got some really, really good insights in when might be a good time to split that 6 months or 4 months based on the best return in history. Stock picking, seasonal investing. Seasonal investing, right? You might just seasonally invest. Value investing for the most underpriced stocks, or when is a good low price to get in. You can use the magic formula investing in the future. Crisis investing, Right, you guys know about the advanced dollar cost averaging, cash for the crash, that strategy. You could use this. I'm sure you guys can imagine how you can use that. Fearful when others are greedy, recession trends. So you can look at all the recession trends. You can look at greedy when others are fearful, the recovery trends. You can get in at the right recovery point. You can get out at the booming point, right? Crazy. There's crazy amounts of ways that you can use this, and I'm just scratching the surface with this thing. And it's already yielded amazing returns for me. So I'm excited for what this can bring.
All right, so that's the tool. Amazing, isn't it? And I can't wait to share with you exactly how I'm using it. I'm going to be running a series of videos on this particular tool and showing you exactly how I'm applying it to my value investing, my passive investing, my trading, my swing trading, my day trading, how I use it to get into investment decisions, how I use it to stay out of investment decisions, and I'm going to show you exactly how I'm using it myself. So if you haven't already subscribed to this channel, please do. I'm on a mission to get to 1 million subscribers by sharing everything that I've learned and had great success with for free on this channel. So I appreciate you being here. Until next time, take care, and I'll see you then.